Good morning and welcome to Fast Market. It's Tuesday, April 9th. I'm Tom White and I'm joined on set by the co-host of Fast Market, Kevin Hincks. And also joining us today is Scott Bauer. He's the CEO of Prosper Trading Academy. Welcome back to the show, Scott.
Thanks for having me.
Bauer. He's
Kevin.
bringing red across the board as far as equities go, though.
Oh, man.
We haven't seen this in a while, guys.
Right.
Stocks are all down today. Bonds are up, a little bit of a risk-off trade after about 9 sessions in a row. The S&P 500 rose. Scott, your take on equity markets? Are we due for this breather?
You know what? I'm only focused in on Facebook right now. That's greens. Yeah, I mean, we should be having a little bit of a sell-off, and it really shouldn't have anything more to do than maybe some people taking some profits off the table going into earnings season.
Right.
You know, which starts in earnest later this week with some of the big banks. So, you know, what's the next catalyst higher here? I mean, the economic reports are kind of in that, you know, Goldilocks area, not too hot, not too cold.
Right.
The market likes that, but listen, if you've been on the ride this year since the Christmas massacre, and you've ridden the market up here, why not take a little off the table?
Yeah, and Kevin, you've got a 1 minute chart.
I put the 1 minute chart up on the E-minis. So you saw right when the market opened a sell-off, and then it's kind of, like a sawtooth rally back up. You know what I mean? Did you see?
It seems like they want to buy these dips anytime we get in the red.
This market keeps absorbing waves of selling, and it hangs in there.
So is this something that we see today? Is this something more than just President Trump now wanting to start the tariff game with the EU or with Europe? Is there something more to that, or is it?
I think that was the start of it, Scott. And think about this: the timing on this, in part of the potential tariffs that they might slap on the EU is based on the fact that Airbus is supported by the governments over there. And we all know it is, and I think that's a well-known fact. But the amount that they put on $11.2 billion or $11.5 billion that they give in subsidies to Airbus, and this due to the Boeing struggles that we've had as far as getting that software upgrade for the 737 MAXs, is this just coincidence? Or is this, constructed timing? I
think this could be a, hey, Boeing, I got your back here, right? I mean, as you go through some struggles here, and they're trying to get, this whole thing rectified, and it looks like some of the reports are now, stuff I'm reading this morning, is it may take a little longer than expected. That's why the stock is down. You're starting to get some of the houses out saying lower in guidance. You're getting American Airlines lowered some guidance today. Southwest is talking about a little longer. So you got a lot of planes out of service. I think it's starting to affect, and this just muddies the waters a little bit.
It does. And I think
Airbus.
the extension that Boeing's running into, everybody thought this was going to be like a 1 month type of deal while they work out these issues. It's extending, and they're saying even through the summer. And I think that's a concern for the administration, maybe coming out with these potential, revisions to, pushing back against Airbus as far as the subsidies that they receive. But positive news, the IMF raised forecasts moving into 2019 a little bit. They said that the U.S. is not going into recession. U.S. job market's still solid. The FOMC's pivot, improvement in Chinese manufacturing data, Scott. So there is some positives out there for the global market anyway.
Absolutely, and we were talking right before we went on here about TLT, TBT, some interest rate sensitivity, which really goes along with, I think, what we're seeing these revised forecasts here. And we're in that Goldilocks scenario, but hopefully this earnings season is something that investors can really focus on, just on earnings, and not some of the external, extraneous headline risks that are out there.
And make no mistake, Scott, we are going into earnings season with low expectations.
No doubt.
Right? I mean, if it's not CEOs from last quarter, if it's not a lot of things, and one thing that should get people a little bit excited is Delta. When they came out and pre-announced, right? Because expectations were low for them. And think about what's going on with the airlines right now. So a day ahead of Delta's earnings for them last week to come out, I think that puts a little bit more volatility into some of these airlines going into earnings.
And when we're going to get to Delta later on in the show, but if you look at what the IMF came out and said, they lowered global forecasts just a little, but they highlighted all the positives that they're seeing, maybe the bottoming out in China and the strong U.S. market. But On the other side of that, the Atlanta Fed now GDP Now number that comes out about every couple weeks.
Lowered a little bit.
Yeah, they lowered it a little bit, but it's kind of stopped that bleeding that we saw in the expectations where I think it was negative about a month and a half ago. Now it's positive and it's slowly creeping up, but not as high. I think you're going to have to wait and see on more of those numbers as far as GDP goes. But another commodity that's rising with the equity market, guys, has been oil. And we've talked repeatedly about this, the correlation between equities and oil. Oil is up 40% this year. Scott, your take on oil, what it's going to mean going into earnings season for these companies? Is that just immediately start raising the red flag that, hey, costs are going up?
I'm not so sure yet, because the rise that we've seen here, it's partly geopolitical, Venezuela, others,
right.
What's going on with OPEC, and it's partly, where is the game going to end? When I say game, I'm talking about production here in the U.S., which keeps ramping up, versus the OPEC cutbacks.
Right.
At some point, something's going to give, whether it's next week, next month, 6 months from now. So I don't know where that is, but I'm really not so concerned that this rise in oil is going to affect this earnings period. Maybe we see them come out and say, big companies saying something about the future, and maybe that's part of guidance, but I don't think that's going to be reflected in this.
Guys, Amber, if you could throw up that one-year chart that I just had up on the screen here, look at the significance of where we are in crude oil versus back here and back here. And look where we've come right up to that resistance.
Yeah,
remember, old
64.
support,
Yep.
Ben Lichtenstein, or Ben Watson, I can hear him in my ear saying old support, new resistance. Look at that right there.
And think about
That's
this.
a significant level we're in right here.
We've got inventories tonight
right?
and tomorrow from the API and EIA, which might give us some color. They were a little bit disconnected last week because we saw a drawdown in API and a really big, massive 7 million barrel build for EIA. So we'll have to wait and see on that. But, with that said, as far as the oil markets go, when is the administration going to come out with a tweet?
We're just waiting.
We're just waiting.
Yes, the answer is yes.
It's coming.
But you know what? One of the reasons why I think that they haven't yet is the fact that oil might be up about 40% so far this year. Gas prices are only up about 25 to 26%. So
they're up.
They're up, and it's going to start hurting bottom line soon.
It will, and also the market's rallied. If there were if we've seen the market flatten out, or if we hadn't had this enormous rally this year in the marketplace, we'd be more apt to probably see a tweet coming out or some news coming out. So, if we do start to see the market sell off a little bit and oil stays up here, you can expect that any moment.
Yeah, and
I laid the SPX chart on top of the crude oil.
Look at that.
And you can see how they've gone step for step here.
Now, but look at that chart. If you look at it, oil let us down, equities down, and now equities severely outperforming. And if you look at like the Exxons and Chevrons and some of the Schlumbergers, they had big days over the last couple of sessions. They're starting to play catch up to the price of oil rising so significantly. Is that provide that next leg up for us as far as the overall market goes?
Yeah, I mean, right in the middle between $76, what's that, about 13 bucks, and about $50 right here. If you think about it, that was a very busy price for crude oil. Remember, take out what we do a lot on this show. We take out right near Christmas and right after. It was kind of a, but look at the significance of right there, and we're right in the middle of both of those.
And that is what some technical traders look at as the 50% retracement.
There it is, right.
Yep. And now think about this. Do you look at this chart between equities and oil, and you say, boy, there might be a pairs trade in here somewhere.
Right.
Maybe sell the overall market, maybe buy Exxon, or vice versa. Think about this. Sell the, sell Exxon Mobil, buy the equity market. I mean, there's got to be some type of pairs trade built into there when you start seeing that divergence.
I agree. But Kevin, you hit the nail on the head. We're not only at that, mid-level, that 50% retracement, but what you said about the old support now being the new resistance, it's right there. Something's going to give.
On it.
Something's going to give here.
Yeah, I agree.
Ben Watson would have a field day with this.
And we'll probably get some, some clarity on this tomorrow post inventory numbers
and
on that.
Especially going into a Tuesday night, Wednesday morning when we get two different inventory levels.
Right.
Oil should be fun.
Yep. So I also wanted to bring this up, this comparison chart that we've got. And look at this. Nope.
Oh, you want to leave
Yeah,
it?
keep that up there.
So here's the SPX with the 10-year yield now.
The 10-year yield. Look at the divergence there. So is this the perfect storm that's headed our way, Scott, as far as, what's going on with the debt market, treasuries, what's going on with the commodity space, and now look at equities still pounding away to the upside.
It's interesting times.
Yeah.
And you can skin a cat a million different ways, and you can look at all these divergences or all the ways that the markets are moving together and make your own assumptions out of it looking at historical data, but something's going to give here.
Yeah, I kind of agree. And you know what the catalyst might be? Is earnings. I think those financials coming out are going to provide some clarity and that first step to what we're going to see this quarter as far as costs rising, wage increases affecting their bottom line, and investment, and maybe government shutdown, maybe trade tariff talk. I think it's all going to play into it.
Banks lead us off in terms of earnings, and this could be a tough leadoff hitter for earnings season because of two things. No rate hike during the first quarter, so net interest margin could be a little light, and then straight up in terms of the market doesn't lead for a lot of trading revenues.
No, it does not.
Yeah.
Right?
No,
so those two things could be a little bit of a pause, but expectations are low.
Yeah.
So that's the diciness around earnings right now is I'm worried about financials going into earnings.
Yeah, I mean, think about this. I heard this. Somebody came out and said if J.P. Morgan, does not do well and disappoints on earnings, watch out.
Yeah.
Because I think the S&P 500's got it built in that we're going to see a decent earnings season, better than expected, as they've been lower in expectations going into this this particular quarter. And the amount of downgrades that we've seen, I mentioned this yesterday, Kevin, on the show, the amount of downgrades that we've seen across the board.
Palooza.
Last Friday was downgrades. Today was big downgrades across the board.
What they say, fade those, the sentiment out there.
Yep.
Once everybody starts piling on in one direction, hop on the other train.
Wait, and then take advantage of that.
Yep.
We had some economic data today. I don't want to focus on it too much, but the JOLTS report, we should hit that a little bit because it fell by 538,000, Kevin, to 7 million or 7.1 million.
Right.
Basically, 11 straight.
Come on, Tom, 7.087.
I know. Sorry about that. I tried to round up a little bit for our viewers.
No rounding.
But this is basically the 11th straight month where we've had job openings of over 7 million. So still a strong, robust jobs market. Anything in this report that stuck out to you?
No. I mean, it's just a little bit lighter than expected. All the data today was good enough. Not, I mean, Redbook was a little better.
Yeah.
Small business was a tenth better.
Yep.
So everything's no real headlines being made out of the data today.
It's what Scott says. We're getting Goldilocks numbers out of this economic data, and I hate saying that word, but it's almost like, I think it's giving the investors that green light that risk assets are okay right now.
So is that one of the reasons why trading volumes have been so light?
Yeah,
over the last
really
week,
light.
10 days, 2 weeks.
2 weeks,
coming into earnings
Well, I mean,
season.
think about it. We're in that chasm between earnings last season and earnings this season. And
Kevin made that point about a month ago. He goes, we're getting into this latter stages of spring. He goes, we might not see anything but a grind in a specific direction.
And markets usually grind which way? Higher,
Yes,
right? And that takes its toll on VIX.
Even though we've got a lot of headline risk, it's not really affecting. Let's get into Boeing, Kevin, because I wanted to make a discussion about this. We've got a position on in here, Scott. We the last week when it dipped, we bought in a stock replacement. So basically a diagonal where we bought the 375 calls and in May, and then we sold the 390s against it. But yesterday we sold a put actually, I think that, Kevin, what's that strike that we're looking at there?
Right here?
Yeah, 395 call. We sold that, but we sold a 387, 390 call vertical yesterday, Scott, to kind of offset some of that that long delta risk that we have on that position. Stock's down under 370, Kevin. We're getting back to that 370 level. What do you guys think here? What do you think?
I personally, I may be different than some people. You add to the position here, don't subtract.
You add to it with the expectation that everything's going to be okay for Boeing.
I think this 370 level, anything under 373 on the chart, I think is where you nibble on Boeing.
You nibbled, Now, Scott, your take on that type of position. Do you let it go? Because it's still not getting slammed, and we did offset.
Positive.
Yeah,
you're still positive because you took in some nice premium on the upside call.
Exactly.
For me, and for what we've discussed at Prosper with our students, right here is an area where I'm interested. I'm not doing anything yet. A couple weeks ago, when we saw this thing get absolutely hammered, we sold a put spread. We sold a put spread. We loved it when the stock was down at 363-ish or so. I'm waiting till we get down to about 365. If we don't get down there, I'm not going to do anything yet.
Right.
If we get down there, I am all in. And all in, that could mean by either selling a put spread if premium gets high enough, or by buying some upside at that point, or a stock.
And you can see on the chart here that I put up a 20-day chart, and you can see that 365, 367 level, very busy right there with only one real breach, and it was part of a day, and then it had recovered. So I think right there is what Scott's looking at, and that's what we should all look at, right around this range right here. And no one says you can't take what I said, take what Scott said, think about your strategy, and then put it in lower. And wait to see if it hits it.
And wait to see if
or
it hits
maybe
it.
you put in half here and half at Scott's level lower.
Right, like you said, Kevin, start nibbling a little here. I would highly suggest not to allocate everything you want to allocate here, but scale in a little bit. But this is certainly coming up to another very interesting area.
And don't be afraid to take profits on the upside too. Remember, you had this thing all over 390 at one point. Take profits if you get if you get it here and it drifts. Take profits.
And I think we did roll just one time on that. But that being said, Kevin, you always talk about this. We need a number, or we need a specific date. When they're going to get this software fix, or what's this going to cost Boeing? I mean, because they've got planes. They lowered that production down from 52 to 42. They got planes sitting out in Western Washington just waiting to be delivered.
I agree with that. Boeing needs. What this stock needs is uncertainty to turn into certainty. But that being said, the day that it does, stock's not going to be here anymore.
It's going to be too late.
You missed it.
I do like that. I do like that thought that Scott has is you've got time on this. You can just sit there and wait. And if you have a level that you like, get in if it does fall again, if there is more negative headlines.
Yeah, agreed. One other thing of note, though, very interesting. Amongst all the news that's out there, they have earnings next week on the 24th. In 2 weeks. So after April expiration.
You can see right here the week of the 26th.
So if you're going to get into this and getting in with an option position post earnings, so anything past the April 18th expiration, you just have to know that in advance.
Don't short anything in that expiration because that volatility is not going down.
Exactly.
They have it on the 24th, so 2 days before that April 26th weekly.
Exactly.
Let's get into this discussion about Apple, because this stock's up 28% this year.
Very quietly,
just snapping
back to 2 spins.
Up to 200. I actually sent something out on Twitter on a poll. Is it going to revisit 180 before 220? And we're starting to get some sentiment that it's going to hit 180 before 220. And if you look at that chart, that's not telling you that.
Well, that's because, you remember, we are, in another life, I'm relatively sure we were all salmon because we are going against the grain here. If we're fading this, that thing is straight up.
Now, we don't have a position on in this, guys. They've got earnings in a couple weeks there, Kevin. Look at the bottom of that chart there. You can get the earnings date for us. I believe it's the 30th. Yeah, 30th of April for earnings. The stock is getting stretched on a technical level. RSI is near almost 80 at this point, Scott. It's getting overbought a little bit, but at the same time, some positive comments today. Dan Ives out of Wedbush, he's on the network once in a while. He raises price target to 225. He said that China's bottoming out as far as iPhone sales. He's expecting a big ramp up in people wanting the newer iPhones, but they're going to be last to the game in 5G, and that's the game changer, I think. And that's a problem for me.
If you're a fan of Apple, and I've got the company profile up, if you have it at home, you can do it. It's all these other things besides iPhone. Remember this number here.
54 a year ago.
Yeah.
54%.
And it was higher than that in the past, but yeah, it's down 10% in terms of their profits, right? But look at App Store and other services. There's that services sector.
Yeah.
That's the higher margin. That's where Apple's still growing. Go ahead, Scott.
No doubt. And everybody, all the pundits that are saying, oh, Apple has to reinvent itself. Apple has to have the new product. You know what? They do have the new product.
Absolutely.
It's behind the scenes. It's not the sexy wearable or whatever it is, but behind the scenes here, like you just pointed out here, that number is increasing steadily, and that is the biggest profit margin for Apple.
Yep, it is. That's what I was just going to hit on. That is a higher margin
Look
product.
At Apple Watch. Moving nicely up to a bigger percentage.
The watch is moving nicely.
The watch is becoming much.
I love mine.
Mrs. Hincks has one.
They just released the AirPod, the new version of the AirPods, which are become a massive hit for them also. And that, and I like the diversification because they did need to diversify their businesses a little bit.
And they're executing.
Now the new Apple News service that's come out. Later on this fall, they're going to have the music, or the streaming service with all Steven Spielberg and the new shows, and Oprah's involved. This hype on this stock is getting there, but they got to lay out some cash for that as far as content streaming.
Yeah, it's not a problem.
What do you want to look at?
They have it.
They do have cash for. What do you want to look at as far as options trade goes looking into this?
Let's take a look at let's go to the board.
Yeah.
43% IV percentile.
That's pretty surprising with it back up 202.
With a straight up rally like this, for that option vol to be hanging in there. Hold on. You know what it makes me want to do? A little more. Let's put a study up and see. Let's see, volatility studies. Let's throw up implied volatility. Just make sure that we don't have some odd number. Well, see that? Look at that. Volatility, other than that one peak here, yeah, it's pretty...
Now, do you think that volatility is starting to rise because there's demand for options out there at this point because of the fact that it's up 27, 28% so far this year?
Yes.
People are starting to make bets, whether it's puts or calls, and they're just buying options.
Yes, you can see on this study right here, if you look at this last leg up in Apple from, mid-March, early March, from 165-ish or 169 right there where Kevin was looking at, to where we are now, that's where you started to see volatility creep up as well. And
you don't see that very often.
No, and with earnings 3 weeks away, I don't see volatility coming down. I'm not sure it accelerates.
Yeah, makes it stabilize.
I think it stabilizes here.
Okay.
So that's a combination of people probably looking to take some profits off, maybe bidding up, the put side a little bit because they want to take some profits
Lock in some profits, yeah.
Exactly.
And look at the sizzle
now
on Apple.
Yeah.
3.5 times.
A lot of volume in here. There's buyers out there. There's demand.
A lazy down day on a Tuesday, and Apple's got 3.5 times their volume.
Let's get an option strategy going here, guys. What are you going to look at?
All right. I think you got to go with something in the diagonal area.
I like rising volatility, and I like taking the contrarian view here. I'd sell a call vertical, but make sure it's a vertical because you want to stay risk defined because we all know Apple can go up another $10.
All right, you want to stay ahead of that. So what? Yeah. April 18th or 26th?
18th. Something short term. Just sell us something like the 205. 210 call spread. I know it's tight. 70% probability of finishing.
205. That's a sand wedge away here.
Yeah. And I want to get you guys your strategy from you. You look at that $5 wide. You're collecting 116. You roughly got about 380 in risk on that. But that's capping this rally that we've seen. That's a way to play it. It's a high probability trade, but you're only about $3 off of that break-even point, $4 off that break-even point. So we can put that in. But you guys go ahead and look at something that you'd like to do. That's the way that I look at it. If you're neutral, that this is getting overbought.
Okay.
That's a strategy.
Scott, I tend to play different ways. I mean, I like, especially here, two things you can do, right? What about something in the calendar spread family, but the longs are in the earnings? Yeah. The longs aren't going down. Now, it'll be more expensive. We talked about this last week. More expensive, but that long side will hang in there.
It's going to hold its value.
It'll hold its value.
And that's the May 3rd weekly cycle. Yes. And do you want to buy that on the upside or the downside?
I want to do like a 205
or
210. Maybe, how about 207? That's perfect.
Yeah, 207.5. That's about $6, $5.5, $6 to the upside on that. Then you sell the 9 days out.
Yep, next week's.
And that
305.
And to Scott's point, he said volatility is probably not going to come down at all going into earnings like we always see. But at the same time, volatility might go up into that, and that actually helps that calendar, right?
It does, and we always talk about this. This gives you 2 more opportunities to roll that out to collect some more premium against it.
Yep. And that's bullish stance. You need it at or near 207.5. So Kevin,
302 on that 207 calendar.
Yep, and a little bit higher price, just like Kevin said, because of the volatility. All right, that wraps up the segment, guys. Scott's going to join us later on in the show, but coming up next, it's Face Off. Ben Watson joins us to look at Delta Airlines ahead of their earnings. Stay right here on the TD Ameritrade Network. Fast Market will be right back.